The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, we're having a lot of volatility in the markets today. I guess everyone realizes that Cyprus has done something with their banking system. The first thing that I do when I hear something like this, I first look to see. First of all, I knew where Cyprus was, but I wanted to get more information, about the country, and it's only 1 million people, which is the same size as Tucson. So when you think of the fact that we have almost 5 billion people on the planet, and 1 million people are going to affect all the financial markets, you have to, think, so, well, let's see what happens. But, of course, the first thing we were watching on Sunday night was the opening of the euro and the pound and the yen and some of the others. And I watched the euros most closely because it's related to the dollar index by 53%. And this is the thing that we would be watching. The second thing would be the Treasury bonds and, of course, the gold market. Those would be the things that I would be watching, for Sunday night, just to see how, the markets were going to, play out, with the numbers, that we're looking at. And I posted into Tiger TV the long-term weekly chart on the euro. It shows the big Gartleys that we've had on the way up that were major sell signals. And the fact that what we're over right now, and we've been saying this for quite a while, is the 129 level, in the euro was a very, very important level. The level last night that it hit was 128.80, I believe, which was right in the ballpark of the exact 786. It made a new low at that time. Now, it's very difficult, to buy something that's falling down, that rapidly. But if you'd have waited just a few hours, you would have been able to, buy it back on a pullback, and you wouldn't have had to risk very much at all. I'll post that chart of the 15-minute euro in there just to give you an idea of what I was looking at. Not that means a great deal, but it shows the euro, making that beautiful, ABCD correction down there at that 129.10 level. It's had a pretty good rally, from that level. Now, all I was doing now, I was making an inference at that time to see if, in fact, that this market would have a possibility of rallying from there. And then after I saw that, I said, well, it looks like it's interesting. But at the same time I was doing that, I was following the gold market from the very beginning last night. And because I do have a strong interest in the gold market always, because I trade that market almost every day. And I'm also involved, in the physical, because I like I just like the way the gold looks, and I think it's a long-term investment. I've been, thinking of gold for many, many years. As a matter of fact, well, back since '72, when they first started, trading the gold, that was the thing that I was watching. But the one thing that I wanted to watch really closely was because they hit these fib numbers, so well, that I wanted to watch the reaction in the market for what was going to happen. So I'm going to put an hourly chart up here just to show you, the fact that we have, given all of the things that have happened in the world, and gold would be the one thing that the people that are, active, have gold, active traders. I don't think there's anybody that I know that doesn't carry some gold and silver in a long position, either in futures or in bullion or in coins. I really don't believe that. But we're right up here at this 786 level again at 1607, and I believe if we can get gold to get above this 1625 level, then I would assume that this would be the next leg of the bull market, that we're looking at, from a long-term perspective. And we've had a very really good run, in the gold and silver and stuff, and I think that this is just the beginning of it. We've had a lot of I've got to pull up the gold chart. I think I get these things correctly, and then I don't. So you'll have to give me 1 second while I pull it up. We've been watching the gold for a long time, but since February we've had these higher bottoms. We've had the important tests, and now we're looking at the possibility of breaking out to the upside. We needed to get it above the 1625 level, and we needed to get there by a really good thrust. And we're not having enough of a thrust today in the gold market. It should be up a lot more than $14. Silver should be up more than 60 cents. This is my opinion, of course, and it's still very early in the day. But that's just, what's happening. We've had a, really strong rally coming back from, the S&P being down, almost 30 points. And then, it's rallied back and it's, almost unchanged. The same thing with the Dow. That does not surprise me at all, because the more people think about how the size of Cyprus is and the fact that it's really, a non-event on the financial markets, but it goes much deeper than that, folks. And the problem is the underlying thought process of the persons that were thinking about taking 10% of people's money, to rectify the situation. That's where the problem lies. They said, yes, we're going to do that. And then, of course, after the fact, they realized, these people are going to be angry. Duh. You don't have to be a rocket science to figure that out. This is what happened, during the Depression, folks. We lost all these little banks that we had, all through the Midwest. Were hit, very, very badly. In the western United States, in Arizona and Nevada, well, Nevada wasn't even hardly in existence, but California had very little a very small percentage of Depression type economies, compared to the Midwest and the East. That's where the major part of it. And, of course, the West Coast was growing, much more rapidly. The problem is that this could be whether it's a flash in the pan or it really doesn't mean anything, or it's a more complex problem that we're not aware of. We'll have to wait and see. But we know, at least I think I know, is that this is a debt problem. This has nothing to do with the stock markets. This is the fact that these countries have been issuing debt just like we have for years and years and years and years, and that's where the problem really lies. And that gives you, the reasons for, that of what we're looking at, in these particular markets. And we'll put the chart of the silver market up here so that you can see that it also has had higher bottoms. And it's really not much. Silver is up very little today compared to what I was expecting. And in fact, last night in the gold market, you didn't follow it, unless you were following it all night long. You didn't know what happened. But the gold, rallied up to 1609 and went all the way back to the 1590 level. It dropped to $16 an ounce to become almost unchanged. It was unchanged on the day at one time, and that held support. And then it went back, and made another new high, which was, a positive sign, from the bullish part. But, if this bullish news does not make gold and silver go up, that's a very, very, very negative sign. And so that's the bottom line of, what I see with the gold and the silver. They've held up, extremely well, and it makes it look like they are, making a really good effort to try to understand, what this political thing is going on. And whether, Cyprus is so small, folks. I mean, it's really a non-event, compared to, to what's happening in the whole world, and that's the bottom line of what we're looking at. Now, I wanted to bring up the copper market because it's not a precious metal or anything, but it's been hit really badly, and we are it's just got such a disastrous chart on copper, and it just really is really amazing that it just doesn't rally at all. And my whole premise here is if this is really a cyclical bull market, that we're getting ready to go to 16,000 in the Dow and 1,700 in the S&P, something like that, then wouldn't copper eventually, if they're going to have to start buying copper to make some of these products? I mean, that's the main thing. We've never had a divergence that has been as bad as the one that we've got going. I mean, that's just a situation that you really can't even imagine how bad that divergence in the copper is. It's just it's really beyond belief in my opinion. I'll show you that longer term one because it's really quite interesting when you see it on a longer term basis. You can really get an idea of why I have such a distrust of this big move that we've had in the market. It's just really amazing, the fact that copper, and now we've gapped down again. We're down 8 cents a pound and below 3.40 a pound. Gee, there's very little support down there up until the $3 level. So that's a situation that also is reminiscent of something not right in the market. So that's it. And remember that the stuff that they say on the TV and stuff, that stuff doesn't mean anything. My wife Sarah told me this morning. She said, it'd be a great idea for Cyprus if they would, short the euro, on Friday night, and then tell everybody that they're going to, get out of the euro or do something crazy, and then cover it on, Sunday or Monday, and that'll take care of all their debts. Well, believe me, that stuff probably does happen, not at the level that we think it does, but if you think that that doesn't happen, I'm sure that it does, because people, they have their own agendas, when they want to do some of these things. So I thought it was rather profound that she thought that way, because that would be a good way for especially a small country no bigger than the city of 1 million people is all they have, and Tucson is 1 million people, so they could probably take care of all their debt plus some if they were able to do it. Someone asked a question about the rally that we're having. This happens all the time. Once people think about how big Cyprus is and the market's down, 100 and some points in the Dow, they view that as a buying opportunity, and certainly that's what it was this morning. But believe me, we've had days where the market, not days that you folks remember, but past 10 years or so, we've had days where the market would be down well over 100 points, rally back to be unchanged on the day, and then go down and make a new low on the day. And that's a sign of increased volatility, which I think we're starting to see. That's the main thing that that I'm watching to see if we do have this increased volatility, because we will. We got to take a little break here. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted into Tiger TV the head and shoulders pattern that I've been watching on the NASDAQ. That's still in place. So, even though we're having, some moves in some of these other indices, the NASDAQ is certainly, holding up with that pattern thus far. The other thing that I wanted to mention, I'm going to just briefly, I want to show a couple of longer-term charts on the New York Stock Exchange Index and how it compares, to the Dow Jones Industrial Average. We're at the 786 retracement of the 2007 high in the New York Stock Exchange Index, and we've made a new high, of course, in the Dow, and that's a very positive thing for the Dow, but not so much for the other one. The other one that I think is important that we're looking at here is the fact that we have the transportation index is making a big ABCD move to the upside, which the last time it had one of these back in 2011, it was quite important. So we'll see if it's going to be important this time. And then finally, the last one that I wanted to bring up is I wanted to show the this is one I think is very important. This is the long-term chart on the this is a weekly chart on the banking index. We made a 382 retracement of that this past week, and I think that is an important one, to look at for longer term, because I don't think these banking stocks are near as good as they're trying to tell us in the market. That's for sure. One of the questions that someone asked me is the correlation between the U.S. dollar and the stock market, and I went back and I did a correlation. I just did an overlay actually between the U.S. dollar index and the S&P 500, and I'll put this into Tiger TV so you can take a look at it, and you can see that the white line, which is the S&P 500, has very little correlation with the S&P or with the dollar index. In other words, the U.S. dollar index and the S&P do not have a lot of correlation. However, over the last 18 months, there's been some correlation, better than most. So I think the only way you can trade these is to trade each one of them separately, and that's I think what is the most the most important thing to look at. And I do watch the U.S. dollar index quite a bit, folks, because that's the one that has the biggest part of the euro in it, and it's something that I think is very, very important to follow. And I'm going to put the U.S. dollar index up here because we did not even approach the old high from last night with this pattern that we've been watching, which is this head and shoulders pattern in the U.S. dollar index. It's very similar to the one that we have in the NASDAQ. Now, remember, we had some really great volatility in the market last night, and yet the U.S. dollar index could not take out, last week's highs. So you have to wonder if it doesn't do that, what is it going to take, to make it move that way. So we'll have to, just wait and see how it's going to, pan out. But right now, the dollar index is still holding, very strongly the resistance up at this 83.10 level, which was the the Gartley pattern that formed there. So the fact that the news did not move this much very much last night is a very important thing in my opinion. So that's why I'm looking at it. There's so many patterns that are completing, and some of these patterns are so long term. There's a weekly chart, so they can be off by several weeks. And I really, thought that the market was going to top around February 28th, and it did for a matter of a few days, and then it went higher, and that pretty much told me that this has got a possibility to go up to the next level, which we did hit in the S&P at that 1555 level. That completed the long-term three-drive pattern, and I don't believe we're going to close above 1560 in the S&P, but that's my opinion, of course. But that's the long-term pattern that's there, and it's in everything, folks. The transportations, the New York Stock Exchange Index, and all of these things. And someone asked me a question about Asia. The Hong Kong market was down quite a bit. It's down over 2,000 points, from where that Gartley hit at 24,000 and change, and we're trading at 22,000 and change in the Hang Seng Index. The China market is still not rallying, even with all the other things that are happening. So we're going to take a little break here and pay a few bills. 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. Someone asked me a question about the Noon EST 500, and I posted into Tiger TV. The low that we made last night was a 382 low coming off of the February 25th low that we had down around the 1482 level. So whether that's going to be, a leg C where we could take us, much, much higher, we'll have to wait and see. But the 1560 should be some formidable resistance. We've just about made the 786 retracement today on the upside around that 1552 level. And if that doesn't hold, then we'll probably, if it gets higher on the day, the shorts are certainly scared to death, and they will begin to cover. And we'll see if that's going to happen. But it did hit some pretty strong support, I guess, here in the middle of the night. I was watching the euro because that's the easier thing to trade. And that was the one that was, telling us that, the euro did have a lot of support at that 29 level. It's still in a bear market, of course, but you can get these tremendous, 4 and 5 point moves in the euro just, coming off some of these, major points. And that level in the euro at 129 was certainly, a major point to be looking at. Now, someone asked a question about the Treasury bonds, and they had a huge move. They went a little bit higher than the 61% of the last swing, but they're still in a downtrend. But there's something I wanted to show you that when I was working this weekend looking at these things was really just absolutely amazing to me, and it's continuing today. And I'm amazed at people the way they think sometimes, because the ETF for the high-yield bonds, which are basically junk bonds, is the HYG, and I'm going to post that into the Tiger Den to let you take a look at it. Now, these used to be called junk bonds. For those of you that don't remember, back in in the early 70s, Mike Milken did his MBA work at Wharton, and it was basically to change the name of junk bonds to high-yield bonds, because these companies could not get funding, to do any type of expansion, and it turned out to be the smartest thing in the world. And he is a financial genius. And the principle of this bond here is, this is really junk stuff, folks. This is not widows and orphans things. They have swings in these things that are just absolutely, that will scare you to death. And yet, for the last 9 months, people have been wanting, junk bonds. They're searching, for yield, and I think that's the absolutely wrong thing to do. So this is a nature of the market. This is what people are, the tops and bottoms. This is how the herd, thinks at the very end. They rationalize, everything they're looking at. They think that there's no possibility in the world, that interest rates can go higher. And all I'm saying is that, we've been in a 32-year, bull market of lower interest rates, and that should be coming to an end very soon. We've broken some of the major support in the bonds and the notes, and this is the first, rally back that we're happening. What amazes me is the fact that we have this high-grade bonds acting so well, in face of all of this. Now, if you look at the municipal bonds, those are the bonds from the municipalities that we have. Those have been acting very badly. Also, we're finally having a not even any type of relief rally, today in the muni bonds. I mean, they're just continuing. So they have some type of a real serious problem that we've been talking about, ever since January. We had those lower tops in February telling us that these muni bonds wanted to go lower, and now they're at a point where, they're so oversold that they're due to have a little bit of a rally. But what I don't understand is why people would want to put their money into junk bonds as opposed to municipal bonds. One of the people on Bloomberg today suggested that, very few of these companies go bankrupt, and that's why these junk bonds are not nearly as junk as they would appear. And I don't think that's a very good analogy, but that's what he used. But we'll see if that. And not all junk bonds go to zero too. They get discounted by 40, 50, or 60%. But that's still a great deal. It's not for widows and orphans, folks. These are interesting times that we live in, and so we have to be extremely careful of what we're watching. On this particular thing that we're looking at. The VIX index is held up, relatively well during the past down move here. We've had a little bit of a the third test of a bottom in the VIX, and it's been not an easy thing to pick up, but it's held up relatively well. Given the fact that we had very little movement today, which was another reason, when the market first opened, that was another reason to make you realize that maybe this market was not going to go crashing down today. My whole feeling was, when I started to hear about it Sunday night, is it's going to take something a lot bigger than a little country of 1 million people to do this. Now, there's a possibility, and I wanted to bring this up. I did listen to Bloomberg last night more than I usually do, just to get some ideas of what some of these people that they have on as guests. And one of the people made a very good analogy, or an example, I guess, and that he said is, what if they were using Cyprus to test the water, just to see how the markets would react, to some of these things. And that's a possibility too. These people that are, that are doing these things with the euro, these are usually pretty smart people. I mean, you have to give Bernanke a lot of credit. He's got a lot of mental power up there. I don't know if he's doing the right things or not, but they have a lot of mental power, and they do a lot of thinking, and they can pull on a lot of people to give them ideas and stuff. And this might have been a way, to test the water. And if that's the case, it certainly tested the water very nicely. The markets did not fall apart today, at least not in the United States. And I'm sure they'll bounce back in Asia tonight, and we'll see if that's going to be the case. But this could be. I think this is a shot across the bow, to make everybody alert that there are things in Europe that are not right. Everybody's been saying that for a long time. And remember, their debt situation is far, far, worse than ours, and ours is bad enough. But we'll have to wait and see if we get it rectified or not. Frankly, I've been doing this for so many years and going through so many of these political and economic things that's one of the things that drove me to be a technician, because I really don't understand, even though I have a master's degree in economics, I still don't understand how some of these people come up with these ideas that they have. The only thing that I look at, are the charts, and, that usually tells me, what direction to be in. If prices are going up, people are buying. If prices are selling, they're going down. That's it's the bottom line, and that's what I look at. But the VIX index has held up a little bit in here, and I expect a lot more volatility. The fact that the Dow moves 100 points down, 100 points up, is not much anymore, considering where it's trading. That's not even a 1% move, and so we used to get moves like this a lot more. People don't realize when President Kennedy was assassinated in November 22nd, 1963, the Dow moved 30 points. Well, the Dow was trading at 500. That was a pretty substantial move. And so, that's what you have to realize, that, these Dow points at this level are not the same Dow points, that we had when we were, back, 40-some years ago. So keep that in mind, but we are going to have some greater volatility, in my opinion, than what we're seeing right now. But the most amazing thing to me is the fact that these high-grade bonds have held up, as high as they've done. It's just really, it's really quite, it's quite amazing to me. Someone asked a question about the Treasury bonds. Where would be a good area to go short? Well, the 618 retracement on these June bonds that we've been looking at. I'll put that up here because we had a buy on those last Friday in the bonds, down at that 140 level, and we had a pretty good run. Over the night, but the 61% retracement came in at the 143.06 level last night, and we did get to 143.20 during the run-up. So whether this is the first 61% retracement of this retracement, we'll have to wait and see. It's still too early, to make any type of analysis, because this country is just too small to make a difference. I mean, why they put so much emphasis on it in the financial press is truly amazing to me. I think it was because of the way they did it, that they were just going to automatically take either 6% or 10% of all the banking deposits of all their customers in order to remain in the Eurozone, and that just didn't make any sense to me. But anyway, we'll see what happens with that. But when something really big happens to one of the countries, whether it's Italy, Spain, or here, or China, or someplace else, it will be so big that we probably won't be able to react to it fast enough. Basil mentioned that on his show, that some of these things, when they react, they happen so quickly that you just don't have any chance to do anything. I think he was referring to Boeing Airlines with their problems with the battery that they're having with their Dreamliner. But this is true. You don't get an idea of that because the insiders, if the problem is coming, we've seen this before with RIM, and we've seen it with the other things. They know ahead, and J.C. Penney's, they know ahead of time, what these sales are and how they're coming in. So they do have some pretty good ideas. That doesn't necessarily mean that they're any smarter than we are. In fact, someone posted a chart that I put into my newsletter this week that I think is really interesting, and that is it comes from InvestSearch, and it shows the performance of the Dow Jones Industrial Average and the way the insiders are selling, whether they're selling at record highs or not. And if you can look at this chart when you get a chance, you'll see that the insiders are no better than anybody else at trying to pick the highs and lows of the market. So I think that just because you see that figure, and I frankly was one that fell into the trap of thinking that just because there was a lot of insider selling that was necessarily a negative thing. It just means that they were selling too early, just like everyone else. So just remember, it's the charts and the price pattern that really is the final analysis of what we're looking at here. So we'll wait and see. We've got some really negative patterns out there on a long-term basis in the stock market, and I remember the 1999-2000 market so vividly. It's nothing like the market we had now. Those of you that are around remember that, but those of you that weren't, I mean, it was nothing for stocks to move 20, 30, or 50% in a day, and that's with just on the slightest bit of news. And if the news was bad, they still went up. It didn't make any difference because we were in a once-in-a-generation, blow-off, market, much like we had in 1929, and it ended the same way because most of those stocks that traded for over $100 a share went to either oblivion or are now trading under $5 a share. Some of them are on the pink sheet somewhere. So that's the major point to remember here. One person just asked me about Apple, whether I was still looking for Apple to make the 394 level. Today is the first day that I think that this might not. We might be in the bottom of the Apple. This morning when Apple opened higher, with the rest of the market opening lower, that was the first trigger that it looks like that maybe this would be, it might not hit the 394 level, but the price that I'm watching to really say that this is not going to make it is the 380 level. That's about $30 from where it is now. We've been in about a 4 or 5 day rally in Apple, and whether we get much more than that, but 380 a share would be the point that I would. What am I saying? 480 a share would be the point where I would say, yep, it's not going to make the price objective that we were looking at. The same thing happened in Facebook. If you remember, I was looking for Facebook to hit $14 a share, and it only got to $17 a share before it had its good rally. So there's got to be a point where you say, I think this pattern's complete, and it's not going to make the target. And that number in Apple is 480 a share, in my opinion. So that's all I see in the Apple. Nothing's really happening other than having a really good run in the markets for the last 5 or 6 days anyway, which makes it very, very interesting pattern. I'm going to post now what I think is one of the most bearish patterns that we have going on in the market now, and that is the S&P 500. This is the weekly chart going back to 07. It shows that we're right at that old high again, at that 1560 level. It shows the 3-drive pattern that we have happening right now. It's completing. It has a lot of symmetry along with it also. And so that's what I think is the most bearish of this. Now, we're going to take a little break here. 877-927-6648.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to give you what I think is a little snapshot of what I'm looking at as far as what's happening in the world. The main thing to watch for me is the euro. At this 120, the low we made overnight with the 128.80, that was the 786 coming off of the long-term, daily and weekly charts. So watch that very closely. It closed below 128.50 would tell you that this market would be failing. That would be equivalent to watching the U.S. dollar index getting above the 83.10 level. That would be going above next week's high. That would be also another indication that pattern would be failing. We're currently, we like the gold market quite a bit. It's holding up very well. It needs to get above 1625 in order to really start moving. The fact that it made the 786 at that 1608, 1609 level overnight is a good point, but we really need it to get a lot higher to get it moving in the right direction. We've had the higher bottoms that we've looked at for quite a while, and it's given us, several chances to buy it on these higher bottoms, which has been good. But it really needs to clear that 1625 level, in the gold to get it to move. The Treasury bonds, they still look very bearish. They're having a little bit of a flight to quality rally today. We rallied about the 50% level of the last high from February 25th last night, and we gave back, almost a point of that, when the market started to rally. So this is going to be interesting. If this truly is a flight to quality, this is just not a one-day aberration, then the bonds will pick up steam because they're the larger market. They're 6 times bigger than the stock market, and people will usually run to safety when they see that their cash is trying to be confiscated. Now, that brings up a big question: is how can someone, confiscate the cash? And that is, they just make a rule in the middle of the night. The president could do it by President proclamation in order to save the country, he could probably come up with some type of thing to say, we're closing all the banks. I'm not saying this is going to happen. I really shouldn't say that. The only reason I bring it up is that's what happened during the Depression. All the little banks in the Midwest and the East were folding, and people, lost, all of their money. And I don't think that's going to happen this time. I think the debt repudiation will be because of the government debt that we have, but we'll see if that's the case. You don't have any control over extraneous events that are done overnight. Like this thing in Cyprus didn't really mean very much. But if it would have happened in Spain or Italy or Greece or someplace like that, it would have had a bigger ramification. That's why the idea that this might have been a test to see how the water would hold, and so far they would be very pleased to see that the rest of the markets, did not react as much. But there are major problems. I don't think there's any question of that. But remember that the stock market is not the economy. The stock market is a market of stocks, and that's all it is. I mean, so don't think just everything is good just because stocks go up. If you remember, all you have to do is go back to 2007 and listen to Bernanke's speech in October of 2007. He said, "I can see no problems on the horizon for the housing market because everything was looking very good because of the shorter-term interest rates were so low." And you saw what happened. The housing market, came unglued and took us down from 2007 to March of 2009. So just be careful up in here. There's a lot of patterns, that are completing on these stocks, even though they edge higher a little bit. That's it. Live every day in an attitude of gratitude, and may God bless.